You are listening to The Vocal Technologist. Spoken tech for your ears.
Welcome along. We're going to cut through some of the chatter today and really look at what's moving the needle in digital assets. There's been some pretty big market action, some interesting strategic plays by major companies, and even, well, the way people are actually engaging with these markets seems to be shifting.
Exactly. The goal here is to take all the latest reports and ideas and just boil them down. Figure out what's actually happening and, crucially, why it should matter to you. We'll hit, I think, three main areas: the market growth, who's making moves, and this change in investing behavior.
Okay, let's kick off with Bitcoin then. It just blew past $113,000. First time ever. That's more than just a price tag, isn't it? What's really behind that surge? What signal does it send?
Well, what's interesting is how this lines up with what some analysts are predicting. We're seeing forecasts of $140,000, maybe even $200,000 by the end of the year. And it's not just pure speculation driving it, right? There's actual substance here. Think about potential pro-crypto moves from policymakers, maybe clearer rules coming down the pike like those Genius and Clarity Acts people are talking about. Plus, everyone's kind of expecting the Fed to cut rates eventually.
Right, so a mix of policy hopes and macroeconomics.
Exactly, and you see the proof in the pudding. Over $15.7 billion net flowed into those spot Bitcoin ETFs. That's serious institutional money. And then there's this strategy copycat thing. You've got, over 250 firms now putting crypto on their balance sheets. It shows huge demand. Plus all that on-chain dollar liquidity from stablecoins. We're talking a $255 billion market just sitting there ready to move.
Okay, so beyond the pure numbers, things get really interesting when you look at the specific moves companies are making. This is where the strategy comes in. Like BIT Mining, they're listed on the NYSE, right? They're making this big pivot, moving focus from Bitcoin mining over to Solana, planning to raise, $200, maybe $300 million just to hold SOL long term. And they want to be a public way for people to get Solana exposure. They're even running validator nodes.
Yeah, that's a significant shift. And it kind of fits a pattern, doesn't it? We've seen other miners looking beyond Bitcoin towards networks like Ethereum too. Diversification.
Definitely.
And then look at stablecoins. International Jack Ma's Ant Group, basically they're planning to bring Circle's USDC onto their AntChain. No, it needs regulatory approval in the U.S., but still.
Wow, okay. What would that actually mean?
Huge implications. I mean, think about it. USDC gets potential access to Ant's payment platform, which handles over $1 trillion in cross-border payments. It could really position Ant to push into regulated crypto services globally.
That's map.
And then there are these whispers, right? Rumors,
Right.
But potentially game-changing ones, about Stripe launching its own Layer 1 network.
Its own blockchain for payments.
Exactly. The sort of bull case people imagine is, direct payments between customers and merchants. No more traditional card networks in the middle. You could even have things like micro-subscriptions billed by the second, or maybe earning DeFi yields on money held in Stripe accounts.
Okay, that sounds like a fundamental shift, like Stripe becoming the actual rails for money movement.
It could be, yeah,
Yeah.
a full-stack financial operator. But, let's be real.
Huge hurdles, right, especially regulation. Building a secure blockchain isn't exactly easy either.
Absolutely. Massive technical and regulatory challenges. It's a big if, like you said.
So with all this tech and market structure changing so fast, what does it mean for the average person involved? How is speculation itself changing? It feels like we're moving past just, throwing money at things blindly. People talk about intellectual speculation now in meme coins, even those zero-day options, futures.
Yeah, and what's really fascinating is how it's happening. It's driven by these hyper-mimetic communities. Think of tightly knit online groups that just instantly copy and amplify complex trading ideas. It creates this feeling, this sort of illusion of skill, maybe, and this real desire for validation from the group.
Like everyone wants to seem smart about their bets.
Kinda, yeah. Speculation wearing a lab coat, you could say.
Yeah.
But the numbers back it up. Those zero-day options, they went from like 5% to over 60% of S&P trading volume. And platforms like Hyperliquid, they logged, get this, $1.57 trillion in annual perpetual futures trading. It shows these platforms built around shared ideas are actually outpacing traditional gambling venues.
So it's becoming more like a collective, complex game.
Exactly, blurring the lines between doing your homework and just taking a risk.
Okay, so wrapping this up then. Digital assets are clearly growing up fast. We're seeing serious money, real innovation, and maybe most interestingly, the way people actually participate in these markets is evolving fundamentally. It's a lot to keep track of.
It really is. Which leads to maybe a final thought for everyone listening. With all this rapid change in the tech, the markets, even how we behave around assets, how might these trends reshape things? Not just finance, but maybe our whole idea of what value means or what community looks like in this digital age. Something to think about.
Spoken Tech for your ears.